Hey everybody, Courtney Smith here with our October 24th edition of Wall Street Winners. Let's dive right in. Well, I made the dramatic call a week and a half ago that we were in a new bull market. I hesitated a couple days later, but I think it's pretty clear that that's exactly what's happening. Now here in the S&P, what I would want to see is a break above this high right here to confirm that. I don't like the fact that the purple predictor is not following, so that puts some doubt into this picture. But all in all, we're seeing some bullish price action. Just on Friday, we had another key reversal up on a little bit heavier than normal volume. Look over it. Here, the Dow is really taken off. You can see here, it's already surmounted that high right there that I wanted to see in the S&P. The action's in the Dow. It's in the economically sensitive areas that will be most affected by Fed easing, all right? So all this bear market, that was to discount the recession that we're going into. Now they're starting to discount the Fed easing. Notice the little green line, buying pressure, is really much higher than the little red line, which is selling pressure. NASDAQ is the weakest of the three. I think it's going to catch up later. It also, I'd like to see it break above that high right there. Now, seasonality, nothing going on here at all based on our seasonality indicator. And let me just go back. I mean, if we get a seasonal bullish signal, which right now I'm saying it has to break above that high, then we'll go to 2 times positions if we get a seasonal buy signal. We may be getting one very soon. So here we are here. We're in this phase right here where we're supposed to be making a new low. Now I use, for some of my advanced, the people in our Stock Navigator program, we use a second technique run by Ned Davis, and they don't have a dip here. They just have a little dip, and then it takes off. But here's the point. The point is seasonality is starting the normal seasonal run here in the midterm election year. It doesn't matter what seasonality indicator you're using. It's time to rally. Now, this was a shocker. Look at the incredible amount of money that came out of bonds and into stocks. What we're seeing is, I think, is a lot of people, the bond market has had its worst bear market in 40 years, okay? And I think so many people have been beat up by that they're saying, wait a minute, I can still get the same yields and be in stocks. Stocks are starting to go up. Let me go dump these bonds and go buy stocks. And so we saw a lot of money flow into the stock market from the bond market. But they still don't want to take any risk. They still want to be in the conservative sectors. That's why we're not seeing the NASDAQ take off yet. It will. I'll let you know. Don't worry. I'll let you know when the NASDAQ will take the lead, but we're not quite there yet. We need to see the Fed really start to ease. Not the market thinking they're going to ease, but actually easing, and then that will light a fire under the NASDAQ. Over here we can see global shares. Looks a lot like the American market. Once again, would like to see this high here surmounted. That would get us into a bull market for sure. Yield curve, though, dipped back down to 0. So that's still negative for the economy. The economy is still not out of the woods at all. And so the real question is the market discounting? Right now, they're discounting that the Fed is going to get up to about 4.75% to 5%. And then cut by March of next year. If we have this signal here, it may be not until we may see the economy dropping until like the fourth quarter of next year. This recession could be bad. Bonds, this is the collapsorama that I was talking about. Steady bear market. I tried to short it, never had a good place to put my stop loss, and now it's crashing. Now this could be a capitulation bottom in the bond market. I've been waiting for one in the stock market, haven't found one yet, but notice how it accelerates down and on super high volume. That's a sign of capitulation, and I think that the bond market is capitulating, and we're going to see a short, sharp rally here very soon. People in the industry, they call that a dead cat bounce. I have no idea why. Okay, our indicators here. So the most important one, the green line, let's break this down, okay? The green line is 10-year Treasury yields. The blue line is 10-year Treasury yields in Germany. Now behind it, this chart is CRB index, and the gold line is gold. Now starting right here, both gold and CRB are in a bear market. That is a leading indicator of bond yields by 6 months. That was July. So let's see, August, September, October, November, January, February, we should see bond yields peak and start to move lower. Write that down, set your watch by it. February, we're going to see interest rates start a major decline, and it'll be caused by the recession that we're going into and by Fed easing. So you heard it here first. I'm telling you what the bond market's going to do 6 months in advance. Nobody does that. That's why you're a subscriber here, or you should be a subscriber. Okay, U.S. dollar, big move here on Friday. After that, I just don't want to be involved in the dollar right now. Gold, same thing, rally here. We might be seeing this support here hold up. So I want to stand aside gold. Our indicators are still remaining bearish. But if you look at them, you can see this one's like kind of flat. This one's kind of flattening out. This one is rallying in a major bear market. So there are some signs of hope for the gold bulls. But right now, the best thing to do is to do nothing in the gold market. Crude oil should continue to slide lower as we continue to see a decline in demand. And the decline in demand will be much greater than the decline in supply that caused the rally 2 or 3 weeks ago. So look for oil to slowly slide lower. Not a big deal, but slowly slide lower. Bitcoin continues to drift lower. The purple predictor is showing that it looks like the smart money's giving up again. I'm short Bitcoin, but not really making much money, that's for sure. This is a dull, dull, dull market. All right, freebies, you know what to do. Sign up right away and get all of the trades so you can see how I'm making money in these.
I want to tell you about a concept that we call extreme profits. I'll tell you what it's generically called in a second, but this is the most powerful risk management tool ever invented. Now, normally I use a technique, and what I teach in most of my courses is a technique called fixed fractional. And I teach that technique for a very simple reason. It's the best balance between a risk and reward, the best balance. But extreme profits, this technique is not about balance. It's about extreme profits. So it's kind of insane, but it does lead, it can, if you do it right, you have to do it right. So there is a caveat there. You have to do it right, and then it becomes the most profitable system ever. Now, this is based on research by John Kelly, who was a Bell Lab scientist, and it was perfected by my friend Ed Thorpe, who was the guy who really popularized card counting in blackjack. And it's called the Kelly formula. You can Google it and you can learn quite a bit about it online. And what the Kelly formula does, though, is it's not designed for this balance between risk and reward. It's designed to maximize profitability. Maximize profitability. So it turns risk management from a defensive weapon into an offensive weapon that you can wield to maximize profitability. Well, it's, nothing is for free. So the bad news with this technique is that there's much higher equity volatility. If you did it the way Kelly and Thorpe used it, you could see your account drop 50% in one day. Now, that's not the way I use it. I've completely modified it so that it's far more relaxed. Still higher equity volatility than I'd normally have and what I normally teach, but much less than the way it's taught by John Kelly, Ed Thorpe, etc. The good news, if done correctly, it can lead to dramatically higher profits. I said a second ago that you could lose 50% in one day. Yeah, but you could also double your account in a day as well. So, as you can see, it's dramatic in both directions, but do it correctly. Now, the Kelly formula was actually invented as a formula. John Kelly to how to get more information to go through a copper wire. He worked for Bell Labs, and so they were trying to figure out how to get more information to go through a copper wire. But then guys like Ed Thorpe and other mathematicians came along and realized that it could be used for gambling and it could be used for investing. And Ed Thorpe built a tremendous career as an investor. I wouldn't even say he was all that good of an investor, but he used the Kelly formula better than anybody I've ever seen. So that's what it's all about. Now, hang on. See, I'm going too fast. I'm too excited. So how can you get this? We've put together a course on extreme profits. I used many years ago. I did a course quite often. It was a $5,000 course, and we did it on futures and Forex, and it was incredible. I mean, it was just an incredible course that cost $5,000. Well, what we've done is we've now adapted this for stock traders. This is amazing. Nobody's ever taught anything like this ever. Now, in order to get this, you have to join the Wealth Builder Insider Membership Program. And that's a modestly priced monthly membership program. I'll show you the URL in just a second here, and you can click on it. But you get this course, which we're posting pieces of it every day now, on the website. And you get that, but then you get the most extensive education on stock and option trading in the world. This membership site, well, I'll be frank with you. The problem with it is that there's too much. You get too much. So we even had to add a section on how to actually attack the website, because it's going to teach you asset allocation, stock selection, swing trading, position trading, multiple techniques for stock selection, ETF trading, everything. It's really, quite frankly, a bit overwhelming. So the very first section, which we call the hub, tells you how to attack it in a logical manner, depending on what you're most interested in. And of course, we also have options trading on there as well. And that's all for one low monthly price. This is like getting 10 PhDs for a peanut. So where can you get this? Well, it's pretty simple. You just go to wealthbuilderinsider.com. wealthbuilderinsider.com. You don't need the capitals, but I just made it capital so you can read it easier. But go there, check it out. Remember that what's not on this website here is we've just added our Extreme Profits for Stocks course inside the Wealth Builder Insider. All right, everybody, go there now. I'll see you inside.